Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. This is Marwa Salim. I'm from Group GLEAD. We are going here to explain about the value investing of SIA Engineering Company Limited. SIA Engineering Company is focusing on the aircraft overhaul, repair and maintenance service in Asia Pacific. The stock name is SIAEC and the stock code is S59. The closing price according to 30 December 2020 is 1.97 Singapore dollars and the dividend is 0.08 Singapore dollars.
Industry analysis, competitors. There are 12,865 companies and branches founded in the transport and storage business. Based off the figure below shows the list of SIA Engineering main competitors within the transportation industry. Here is the list of 10 companies. Industry average calculation is including SIA Engineering company data. Liquidity ratio. Based off the above result, we can say that the output of the current ratio for SIA Engineering is better than the industry average of 12 companies in the same industry. The greater the size of the ratio, the greater the insurance margin the company has to cover short-term debts. In addition, the pattern shown by SIA Engineering continue to increase year by year without large differences compared to the industry average. Operating profitability ratio. Based off the outcome of the net profit margin in the first graph, we can conclude that SIA Engineering output is more stable than the industry average. Even though the value slightly declines years by years, we can see that the price for the industry average are not compatible with the massive changes every year. From the output of the company alone, SIA Engineering has trouble turning profit into actual profits. Now, let's take a look on return on equity graph. We can infer that the return on equity ROE output for SIA Engineering is superior to the industry average, which means the company increased its production of income without the need as much as capital. Although ROE show a declining trend, the result of the industry average indicate an unfavorable trend with high and wide fluctuations. Next, solvency ratio. Based on the debt-equity ratio and debt to total asset that has been collected, the pattern of both ratio for SIA Engineering show increasing in value years by year starting from 2009 until 2019. For comparison to industry average, we can see difference in trend which the industry average show increasing value dropped significantly in 2017. For both ratio, this indicate the performance for SIA Engineering is preferable than the industry average. Let's take a look on turnover ratio. On total asset turnover viewpoint, the performance of industry average is preferable than the SIA Engineering company. This indicates that the companies in the industry average implies that it can generate revenue from its assets better than SIA Engineering company. Earning ratio. Based on the performance of earning ratio and dividend yield, SIA Engineering are attractive above the industry average. SIA Engineering show fluctuation trend in earning per share and downtrend in dividend yield while the industry average show a constant trend for both ratios. Even the performance of SIA Engineering is better than in the industry average for both ratio. However, the trends show a decrease in value for SIA Engineering companies. Lastly, in industry analysis is DuPont analysis. Based on the above measure result, the DuPont analysis value for SIA Engineering are preferable than the industry average. This is because the outcome of the industry average indicates a large difference and a strong fluctuation in values. This can be shown by large fall in the value from positive to negative in 2017.
we proceed for the next part for the financial ratio for the company SEA Engineering. First one is liquidity ratio. From the chart, we can see it shows increasing pattern from 2009 until 2019, but the current ratio, which is exceeding more than 2, explain that the company may not be using its current asset or its short-term financing facility efficiently. Next one is profitability ratio. So for the profitability ratio, the net profit margin and return on equity shows a decreasing trend for 10 years from 2009 until 2019, reducing in net profit margins of a company explain that a company is having problem at turning revenue into profits, while declining ROE explain that the company is becoming less efficient at creating profits. Asset management. So for the asset management, we include the total asset turnover. As we can see for the charts, it shows that decreasing trends for the 10 years also from 2009 until 2019. Low asset turnover indicates that a company is failing to efficiently employ its asset to generate sales. Next is solvency ratio. Both total debt to total equity and total debt to total asset shows an increasing pattern from 2009 until 2019. Increasing in debt to equity shows that the company has been aggressive in financing its growth with debt, while the high ratio in total debt to total asset indicate that the company may be putting itself at risk of defaulting its loan. So we proceed to the CAPM calculations. The CAPM, the capital asset pricing model, outline the correlation between the systematic risk and expected asset returns. From the calculations, the required rate of returns, the result for the CAPM for the stock is 42.54% by using risk-free rate, which we choose the Singapore 10 years government bonds for the risk-free rate to align with the CAPM calculations, and the expected return is 76.69 and beta is 0.05 that we have been calculating in the Excel as well. So we proceed for the next part for the valuations. We use the dividend valuation method for our valuations. First is SEA Engineering next dividends. Payment will be $0.05 per share, while the company last 12 month dividend paid was $0.08 per share. So for the dividend growth rates is negative 0.375, and we use the variable growth, and the result is $0.062. From the dividend valuation method DVM perspective, we suggest that the investor to sell their shares because of the value calculated is below than the company current price, which is $1.97.
So for the recommendation part, from the financial analysis, we can say that the engineering company performance based on the liquidity ratio, profitability ratio, asset management, long-term debt paying ability, total debt to total asset, dividend yield, and earnings per share shows unfavorable trend year by year. The valuation method that we use it also demonstrates that the company's stock price overvalued compared to the current price. Therefore, we highly recommended investors to sell the current shares to avoid maximum losses in their investment portfolio.